Welcome back, my awesome people. So, in today's episode, I am here with one of the greatest inventors in Canadian history, Sheldon Inwentash, who is the founder, chairman, and CEO of ThreeD Capital, ticker symbols IDK and IDKFF, which is the leading small cap investing firm that has a portfolio with some of the most groundbreaking and revolutionary companies that are ready to disrupt the blockchain, financial transaction, biotechnology, AI machine learning, electric vehicles, and precious metals and battery metal sectors, and many, many more. All their companies in their portfolio are from the ground floor. So it will feel like investing in companies before they even IPO. So without wasting any time, welcome to the Jacob Rant channel, Sheldon. And it is an honor and privilege to be with you today.
Yeah, thank you, Jacob. It's great to be on your platform. Look forward to it.
Definitely, and to many more as well. So before we get into the details of ThreeD Capital, can you tell us more about yourself, your background, and how you got into capital investing and ended up founding ThreeD Capital?
So it goes back a ways, but I'll try to be brief. I'm a CPA by background, so I spent 3 years at Price Waterhouse. Then I entered industry as an oil and gas analyst for a life insurance company. Then I began making investments for them directly in the oil and gas space, and ended up being part of a $12 billion company that I basically originated in terms of assets. I then went out on my own, and I started founding businesses, the first one in nuclear medicine. Then I founded Pine Tree Capital, and Pine Tree Capital is, a good mold of what we're doing here with ThreeD. When I took it over, the shares were, I don't know, 5 cents or so. It was a shell company, really. By the time it hit its peak and I exited, it was $26. Had a number of exits of over $1 billion. Was involved in cross industries from precious metals, minerals, oil and gas, and also biotechnology, where we sold a company called Visible Genetics to Bayer. Our stock went to $120 on NASDAQ, and it's basically formed the foundation of what is called personalized medicine today. At that point, it was called pharmacogenomics, because we could measure individuals' DNA sequencing, and then by your individual DNA footprint, we could prescribe drugs to you. So we would manage disease, and that was a very disruptive and groundbreaking. I helped co-write the original business plan, helped raise $700 million. And then, as I said, it was an exit to Bayer. So what happened was I basically retired, and then my son, who's Jackson, who now works with me, wanted to get into this business. He'd been working for a major bank, and I happen to have a passion and love to build things, and so basically got ThreeD Capital going, maybe 7, 8 years ago or so. I've been essentially stealth for all that time in terms of really talking about the things that we were doing. And the reason for that is I didn't want to tell people I'm working on the greatest technology, the best mousetrap. We're going to do this, we're going to do that. With all the certain uncertainty that goes with R&D, marketing, launching new disruptive companies. And all I was looking for with disruptive companies that we could see a 50 to 100 times our money back on. And the business model there is to invest, as you said, Jacob, on the ground floor, seed capital, help these companies get going from the get-go, and then work with them to build them. And we would do that, obviously, to get them the capital they needed. And I've raised over 30 billion for the businesses that I've been involved in over the last 20 years. So, sourcing capital is something that we've done very well. So then we get involved in sort of helping these companies grow after we've made our initial investment, and in many cases we continue to invest in multiple rounds and guide these companies based on all the experience that we've had, because all these companies end up facing the same issues and problems in terms of growth. So we feel that one of the best ways to grow for small companies is to do strategic partnerships. because in the olden days, everybody wanted to develop all the technology, control it all, and spend a lot of years where ultimately someone leapfrogged them. And so the big issues that I see with these small technology companies, businesses, is time to market. So if we can crunch down the amount of time so that these companies can actually get out there, you're going to have less competition. And if you partner with other companies in terms of collaborations where they say bring a solution to what you want to sell, and you bolt it on, then you both can participate in the upside. You don't have to recreate the whole wheel yourself, and it's less money because someone else is developing a component of what you need to launch your product, service, or tech. So we are very active in creating strategic partnerships, and I'm going to give a couple examples of that. So over the last 7 years, we've been able to invest in almost 70 companies. We have not done a financing in over 5 years, which means that the companies that we've invested in have done well enough that we could exit some and have the capital to continue to invest, as well as pay for our overheads. And in addition to that, we have probably bought back 10% of our shares. So we used to have maybe close to 55 million shares. Now we have 50. So what we're doing is totally aligning ourselves with all shareholders, because any shareholder would want to see less shares out, so the profit per share is greater. And so we've been able to do all those things without raising any new money. So we do have a track record, and obviously, Pine Tree going from 5 cents to $26 is a track record, many exits. But here as well, we've been able to keep a low share count and yet have 70 companies. So the 70 companies are sort of split into different sectors. And again, why I approximately a month ago decided to go and begin to tell the ThreeD Capital story is because a number of the companies that we've been involved in for a few years are launching commercially this year. And it's cross-industry. So one of the big areas of focus for us has been AI, but not showing up at AI now because it's hot and trendy. No, this goes back 7 years. So we have many, many AI projects. We have 2 that I consider trillion-dollar opportunities. One is in micropayments, and they basically debuted last week. They put out a press release. We are partnering, that basically that they're launching their product. It's in micropayments, a company called TodaQ. It's based on a protocol called Toda that is unlimited in its scalability, and the cost per transaction are fractions of a penny. So no one's been able to really do this before, but now it's the perfect time for micropayments. I give many examples. If you want to play a video game for 5 minutes, but you cannot afford a subscription, or you cannot afford to buy the game, but you want to spend 15 cents and spend 5 minutes. That was never possible before because the cost of processing such transactions between KYC, know your client, third-party verification, processing charges, in many cases, it could be 50 cents to a dollar per transaction. Now, our cost to process these transactions is a fraction of a penny. So the business models that are going to be disruptive are everywhere. If 6 out of 8 billion people on planet Earth cannot afford subscriptions, they can only afford pay-per-use. And that market is basically shut out from many companies like Netflix. So now someone says, I want to watch this documentary from 1986. I want to watch the movie Easy Rider from 1968. Well, guess what? How do you get that content? It's not available in a fractionalized or divisive manner. You have to buy the subscription, and you don't want to get the subscription, and maybe you don't even qualify for it on a credit basis. Now you can go, I want that movie from 40 years ago or 60 years ago, and I'll pay you 10 cents. Now Netflix, for example, and this is called the long tail, where most of the content and product that they sell, the hot stuff, is the latest series, the latest show, Shogun, this and that. The old stuff, people watch here and there, but mostly their subscribers have either watched it or don't care. Now you can open it up to a big part of the market to basically subscribe on, or purchase on a per use basis. And this is revenue that Netflix never would have gotten before, or a video game company that only rents or sells their video games. Now you can basically purchase it for one-time use. And so we think very strongly that this is going to disrupt a bunch of business models. It's launching this quarter with Google and CIBC and RBC, major Canadian banks, to process a transaction. It's called TAP, and it's easy to do. It's very quick. It's instant settlement. And what's interesting is, because we were co-founding investors, we own 280 million notes, which I disclosed last week. And those notes basically, are written to zero on our books because there was no business. Now those notes are going to be used to process these transactions. And the value, we believe that notionally is going to be approximately $1 US per note. And every time a note is used, we get paid. So the potential upside to participate in this ecosystem for ThreeD Capital, owning 280 million notes, but also owning equity in TotaQ and in TotaQ subsidiary, which is Tota Micro, and the micro is the Micropayments that I'm just referring to. So we're extremely high. I believe this could be $1 trillion company, because it's going to open up new methods and routes for cash flow for all these companies that previously couldn't. Aspiring young singers now can charge a penny for someone to listen to their song. They may not get a full label or Spotify, but they can certainly put their content out there for consumption. One of the other companies that we're involved in the AI space is a company that's about to get launch FDA approval for a watch or wearable that you can take your own blood pressure and that is accurate. So there's no FDA approved product on the market today. Well, that company, which is called AIML, which is out of my office, I run a bit of an incubator, has partnered now with TotaQ, so that every time you have a wearable and you want to test your blood pressure, and blood pressure, by the way, is the precursor to many, many diseases, certainly heart attacks, you press a button and call it 15, 20 seconds. It measures your blood pressure, and that costs you, for argument's sake, a penny. A penny was never possible before because, as I said, the cost of doing that transaction. So what's happened now is TotaQ now has a customer it never would have had before. And this wearable company now has a source of income, because if it would go and say, okay, you have to subscribe to our device that will give you your blood pressure every month, and it's going to cost you $9.99 or $20, whatever it is, most people do not want to pay that. There's pushback. But on a user basis, if you suddenly are somebody who needs to monitor your blood pressure, and certainly as you get older, it becomes more dominant as a health issue. Well, do you care that you're going to press that 10 times a day for 10 cents? Well, if 1 billion people are doing that, that is about as good a business models as you can think of for that company, and also for TotaQ Micropayments. So I can go on and on about applications here. If you're a researcher, you want an article, you don't want to subscribe to journals that again are many dollars per month. I just want an article. I'll pay 25 cents. That was never possible before. So we are extremely excited, and it's now launching commercially. So it's not R&D. It's actually going to be a business. The second business that is coming out of the same protocol is a company called Hypercycle. Hypercycle is a partnership between Singularity, that is an AI company and has been in AI for 30 years, but they needed to scale their business because AI involves millions of transactions potentially a second. And they were unable to get that scale until they found this protocol called TODA. The same underlying protocol that allows micropayments is now, through Hypercycle, going to facilitate the Internet of AI. And what that means is all AI machines are going to be able to speak to each other, become smarter, and do transactions and settlements. Most transactions in the future are going to be machine to machine. So Hypercycle is basically going to enable the Internet of AI to become something. So again, imagine you own an interest in a company that is the author and financial partner, if you will, of the Internet of AI. AI is growing 400% a year. We've never seen anything like that in our lifetime, and it's not slowing down. I just came back from the NVIDIA conference in San Jose, and mind-boggling, the new evolution and revolutionary technology that they brought out. Blackwell, a GPU, 25 times more powerful than 1 year ago. They're going to be able to predict climate change and so forth and so forth. So the Internet of AI is happening as we speak. It's going to affect all parts of our life, and ThreeD owns a piece of that. I won't have enough time to go through the whole business model,
No,
but
definitely.
we believe it's $1 trillion opportunity there. So those
And
are two. I'm sorry. Go ahead, Jacob. I'm talking
no,
a lot.
sorry, I was just about to jump in and say, Canada actually approved, I think the other day in their next federal budget, Trudeau said he's going to invest about $2.5 billion to bring more AI into Canada. So TodaQ, the dream of AI, the future of AI is definitely here, and it is definitely going to grow exponentially in the next year, few months. And you guys are in the perfect position to capitalize on that. Sorry,
And the
continue.
Canadian government just basically recognized TodaQ as top 8 fintech company in Canada. So that's a real endorsement. Another area why the government is going to do that, we have another business. And by the way, what's great here is in the last month, I've set up a YouTube channel. So if you go to our website at ThreeD, you can see videos. And we probably have 10 of them now of companies that I'm talking about now, where rather than listen to me, you can listen to the CEOs and founders talk about their business. And so you're going to see TodaQ, you're going to see Hypercycle, you're going to see AIML, which is the blood pressure company. Another one you're going to see that we're involved in AI, is we're helping municipalities, governments to manage smart cities for sewer and water use. Because basically these cities are all growing, but they don't have money to expand their infrastructure, so they have to be more efficient with it. We are also providing those services for them, and we probably have 10 municipalities now, so we're getting contract after contract. And again, it's AI driven. So it's a good reason why the federal government will want to sponsor more AI initiatives, because it's going to create many of the government areas to be much more efficient, because as we all know, they don't have enough money to do what they need to do.
Exactly. And it takes experts, and it takes these small cap companies who are taking a risk and experimenting with the future to take, countries, cities, provinces to the next level. And even just the home, like smart homes are also becoming a big thing in the future as well. And currently, so another thing that I wanted to point out was I did look at the YouTube videos on your channel, and each video is a different CEO, which I loved, and it was very informational. How do you pick these winners? How do you pick these small cap companies? Because I know there's thousands of small cap companies that are, trying to get a highlight or a spotlight in the world of the tech sector. How do you pick them? How do you find these winners?
Well, you know, you hope you're going to find the winners. I have a very, very robust deal flow, because I have been around a long time, and the visibility on a lot of companies that I have previously built, thousands of deals that come our way every year. How to pick them, that's not easy, but we try to use what we know and understand and try to figure out where's the world going. So another area that we're involved in is biotech. Now, we're not involved in building drug companies, although we do have one drug company, which I will mention. But we have 3 companies in California in the area of longevity. Longevity research is now exploding because breakthroughs have been figured out. Like, for example, your epigenetic clock is your biological clock, which tells you how old how long you're going to live. And now they're going to figure out ways to reprogram those clocks in your cells to convince the body that the body is younger. So we call that health span, not lifespan. And we've had 2 major breakthroughs in companies that we're involved in California. And we are extremely optimistic that, we have some real unicorns in that space. Another one that is just been uploaded to our YouTube channel is a company called Wearable. And Wearable is, I guess people know Neuralink from Elon Musk. We're a Neuralink, but non-invasive. All it is a headset, and it's all AI driven. And we believe that every headset in the future is going to have our technology inside it, like people might know Intel inside because of the chip. And it basically measures brain waves. And through that measuring brain waves, it can tell you when you are not focusing, and it tells you refocus. It's going to be used with paraplegics and those that are unfortunately have disability and lose control over parts of their body. By thinking, you're going to be able to change the music channel, change your TV channel, turn a page on a PowerPoint. Like, the breakthrough is absolutely crazy. So I encourage people to look at that video. It just got uploaded on Wearable, and you'll hear the CEO and founder talk in plain English why this technology, after I think from 2011 till now, is being commercialized this summer. So we're extremely optimistic on the future of that.
And
another company is Avicana. So anyway, we have 70 companies. There's lots to talk about.
Yes. So my viewers, I'll be putting down all the YouTube links and the Instagram links down in the description below. And also, if you haven't watched before before this interview, I did do a breakdown of 3D Capital where I do go into detail of some of the companies that Sheldon is talking about, so you can get some more information there as well. Just to go back to the wearables, will this be maybe a good exit once it becomes a unicorn to maybe a much bigger company such as the Fitbit, because I know they got sold to Google. What do you think about the wearables? Do you think it might be taken over by a healthcare company officially, or what is the vision for that? Because wearables is growing, especially if it's going to be something that is health beneficial, and not only health beneficial, but I know Google came out with the glasses years ago. It didn't really pan out as they wanted. Where do you see wearables going in the future?
You know what? It's a very good question, because I have a very current update, which I just received from the company, which is out of my office, so it's easy for me to do that, and I want to be on top of all our companies and their evolution. The current wearable market's between 30 and 40 billion a year. That number is going to 250 billion in 8 years. And this is not our numbers. This is like, the industry talking. We believe that it's going to be game changing. We believe that through sensor technology, eventually sensors are going to be in your clothing, and they're going to be able to measure vital information from your body so you can do something about it. We believe with our starting in the blood pressure world, we are ultimately going to be able to predict heart attacks. Well, you know what? A lot of major medical companies would die to have that information and that technology. So I believe that within 2 years, this company will no longer be its own public company. It will get acquired without question, because the wearable market is just exploding. And the key is the tech. And it's all our tech is proprietary. It's IP that's been worked on for a long time. And we feel that we have very unique status, and that we're going to be first mover first mover to market, and those companies always get, the biggest valuation. So we believe it with micropayments. Now we believe it with blood pressure wearable, and you put the two together, and you get two major business models that, like I said before, were never there previously. But people want that. People want to know before they get further sick. With the headphones, there's a possibility that we are going to be able to detect Alzheimer's or Parkinson's well before it gets to the point of no return. So preventative is going to be the big area where we're going to live longer. We're going to be able to treat it before it becomes, toxic to our bodies and our minds. So I believe that all these technologies are extremely disruptive. And I'll just say one thing. Why do I think people should look at 3D Capital? First thing is you're going to get a diverse range of very, very disruptive businesses. And we also are 20% in mining, and we are going to participate substantially in the evolution of the battery metal boom, as well as precious metals through gold, because we have very strategic assets that were acquired years ago. But we also are involved in cybersecurity. One of our companies just was part of a $220 million contract given out by the Canadian government for CF-18s. So that is pretty significant. We're involved in biotech through the longevity company. So anyway, we have a portfolio of companies where the average person may not get exposed to them. And the other thing we do is we buy at the founders and early level. So we buy at very low valuations, which in most cases investors don't get access to those companies. We do the due diligence. Investors, may not have the core competency in all these areas. And we actively manage building these companies. So we're value added. So these are things that I think are value added. Like people say, you're a mini ARC. ARC is run by Kathy Wood, and she invests in disruptive companies, but they're all mature public companies. And, she can't add value because they're already big. In our companies, we can add value. So that's another edge that you get when you invest in 3D.
And that is exactly my next point, that I remember a few years ago when ARC first came out through Kathy Wood, but most of our companies were companies like Zoom, companies like that were digital health, because there were lockdowns, people could not leave their home and go to the doctor's office. But these were companies that were already, as you said, mature. Whereas the companies, because I did look at the holdings of 3D, and many of them are still private. Many of them have not even been public yet, have not IPO'd, have not even been on any major exchanges. So in the video of my breakdown, I pretty much told my viewers that if you are looking for a company that is kind of like the ETF of groundbreaking, ground floor type of small cap companies, 3D is the way to go. And I've started my position on Friday after our last discussion, and I'm excited for it. So I think that it is affordable enough right now, and I've told my viewers that buy it now. Why wait? Because every week there's some new news. Every month there's going to be a different partnership. So I think that, Sheldon, you are on the right track with 3D. I've never met a company like this before, and this is something that I'm excited about, and I know my viewers are going to be excited about once they find more details about it. If you had to say pick one company out of your portfolio of 3D that you had the most promise for, what would it be?
Well, it's like I say about, my three kids, which one do you love the most? And you go, well, I'm not going to get caught in that answer. But I would say,
I guess maybe
tied
not
for,
one company, but maybe a sector, I would say. What
well,
sector are you more excited about?
yeah. So I started this whole conversation with what I consider to be two potential trillion-dollar opportunities. One is Q for micropayments, and the second is Hypercycle for the Internet of AI. Both those investments are going to change everything, in my view. They're both sponsored by world-class technology companies. I cannot talk about all the partnerships, but I did mention Google. Each of them are going to provide cash flow to 3D because we have an ownership stake in each of those ecosystems. So the leverage is staggering in my mind for those two. From there, I can go on, and there are so many game changers. We have 6 companies that are IPOing this year as well, and typically companies don't IPO on a down basis. It's because the market really wants to invest in them. But again, like I said, we have 70 companies here. We're really only touching maybe 5 in this conversation. We probably have another 5, so about 10 on our YouTube channel, and then that's going to increase probably every month by a few. So there'll be a huge amount of data points here, and not only that, anybody who wants to go down the rabbit hole and listens to, say, the YouTube presentation by management, CEO, or founder, can then go deeper on each of those individual companies, because they all have all their own data points and information and website, and some of them are even public. And you learn way more than I'm going to tell you today, or I can tell you, and sometimes more than the company can tell you, because it's an ongoing situation with news and disclosures and so forth. So, my objective here is to be very transparent, very aligned with shareholders. That's why we buy our stock back. We don't issue more and more shares. And we are also the largest shareholders. So we are aligned with all shareholders. And, what we want to do is best for the company is also going to be best for the shareholders. But
I definitely agree with that, because just from your background and your history with companies, you've always put the company and the investors first. And that is something that my viewers have always asked about, which companies are investor first. And I know for a fact that ThreeD Capital is one of them, especially with a CEO like yourself who has done amazing things in the past and will continue to do amazing things in the future.
Thank you.
Yep. So I know that in the next few weeks, I'll be posting more updates from Sheldon and from ThreeD Capital. So my viewers, please make sure you stay tuned, subscribe, and like. And I will have ThreeD Capital's YouTube page in my description as well. So if you would like more information, which I know you will, please click on the link, look at each of the videos. Each of the videos has their own CEO from the company that they are working with and managing, and dive deeper, because this is just the beginning. We are on the ground floor. As Sheldon said, a few companies are going to IPO this year, and you know how IPOs are. As soon as an IPO pops, the share price also pops. And currently, ThreeD Capital is such at an affordable price before the IPOs. So once it IPOs, you might be a little bit late to the game. So my viewers, I will give you more updates, more information. And if you would like to comment below with any questions you might have for Sheldon or ThreeD Capital or myself, me and Sheldon are just one phone call away. I can get that information right to you. So until the next time, peace out.